Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Tuesday, August 19, 2014. You're looking at a daily chart of the SPY, and the band marches on. So we had another up day. I mean, this market, you're basically into this gap fill here from the low here was 198.45. The high today, 198.54. So you've filled this gap here. That was a slight gap, but one nonetheless. So markets like to fill those gaps. And I think, you just have to make new highs, but it doesn't have to be tomorrow. I'm going to talk about that in a second. So, all in all, it was a float higher or a gap up at the open, actually. Let's take a look at the 10-minute chart just to put in perspective of where we are and what happened here. So here we go. Here's the beginning of the day. So yesterday we had an up move, bullish consolidation all day. Today we had an up move, and I don't know if I would call this, it almost looks the same. I mean, it's just sideways consolidation, but what happened was, you see how at the end of the day here yesterday the market turned up? This is a little buy program that comes in, which means there's some demand out there, and you're not surprised to see the next day gap up, albeit not always this much, but nonetheless it gapped up because the market finished strong. Finished strong here, gap up. Okay, let's see what else we got. Finish strong here, gap up. See how that works? Finish strong here, gap up. Okay, finish strong here, gap up. Okay, finish strong, gap up. Okay, so it's the same routine over and over and over again. All right, let's go back to where we are. All right, and today we didn't finish strong. We actually finished slightly weak. Not that much, but slightly weak. Nonetheless, it's got my eye. And the reason why it's got my eye is because, and here we go. Here's a theory for the next couple of days. And it's nothing more than a theory. I just like to have fun with trying to predict the rumors that surface and the media attention on certain things and how it impacts the market. So here we go. You have the Jackson Hole central bankers boondoggles starting tomorrow and lasting through the remainder of the week, I think maybe even into the weekend. All right, so here's what you have. You'll start to have some jawboning of people that attend the meeting, and the media will be there, and they're going to be interviewing people, and there's going to be a lot of rumors going around about what Janet Yellen's going to say. I think she talks on Friday, and what other central bankers are going to say and going to do, and there's going to be a lot of just information overload going on as it relates to the global economy and the interest rate environment. That's the hot dot right now. That's the hot topic this week, right? When they're in Jackson Hole, those are the hot dots. So, being that the market finished weak today, okay, I'm suggesting this. I'm suggesting that somewhere along the line tomorrow, you're going to have some information come out from Jackson Hole or about Jackson Hole that is looked upon tomorrow as negative on the market. The market pulls back a little bit, and don't get me wrong, not that much. You might even just come into this gap window or maybe this gap fill. I'm not looking for much more than that. I'm not suggesting it's going to be a big down day. I'm just suggesting downward motion. All right. And then maybe it bleeds over into Thursday, and then all of a sudden you have the speculation about what Janet Yellen's going to say and what this one said, or we misinterpreted the thing from yesterday and this is what they really meant. And then all of a sudden you'll have a turnaround in the market, and you'll probably finish the week strong into Janet Yellen's speech. Okay. I don't see the market going down the day Janet Yellen speaks. Okay. Take that for what it's worth, but I just don't see it happening. And then next week we'll take it one day at a time. But right now, that's kind of the way I see this week finishing out. Maybe a down day, maybe a down day and a half, and then an up move Thursday into Friday, and we probably finish the week possibly even at new highs, or maybe about as high or higher than we were today. And so that's what I see happening. Again, that's just a theory, okay? It's not what the numbers are telling me. Basically, the numbers are telling me it's a light volume market, and it's going to float around, and it's easy to push around, and it's certainly easy to push up, which is the path of least resistance. coming into the Labor Day holiday weekend, I believe the market, the S&P for one, makes new highs. Speaking of which, if we look at the Dow, it's just interesting because what I noticed today, I don't really watch the Dow, but what I noticed today is we're not as high on this rebound as we are on the S&P. Okay, S&P, we're about over here. We're close to new highs. The Dow, we're not there. Okay, here's the actual, here's the actual S&P chart. Okay, the SPX, we're at almost at new highs. Once again, here's the Dow chart. Okay, and the Dow chart is not close to new highs yet. And guess what? Let's look at the NASDAQ chart. We're surpassed new highs. We're at new highs. We're making new highs on the NASDAQ. Let's go over to the Russell, okay? Because guess what? On the Russell, we're nowhere near even close to making new highs. We're just about 50% retracement from this move to this move right here. Okay, so you have the Russell is weak, the NASDAQ is strong. Now that's interesting because usually they'll coincide together more often than not because the Russell is small and mid caps and more risky, higher beta to the market, and the Nasdaq has a higher beta to the S&P or the Dow, so that's more risky. A lot of technology and a lot of high tech stuff, and so usually when those two things, that's risk assets going into those indexes, the Nasdaq and the Russell. So you have the Dow dragging behind or lagging behind. You have the S&P almost at a new high. The Nasdaq made a new high, and the Russell not even close. So, by the way, there's no pattern there. I'm just pointing it out. It's just stuff I watch, and I'm noticing it. So I haven't really made anything of it yet because it just doesn't mean anything yet. We'll kind of see how it goes. All right, I can't leave the stock market until we mention Apple, right? I mean, Apple made its new high today. It had to make a new high. Let's go over and look at a longer-term chart so we can see the new high. Here it is. Okay, it touched the new high. So the old high was 100.72. Maybe it didn't. I thought it did. 100.68. Oh, we didn't even get there. Intraday high, we didn't get there. Where did this one close? 100.01, and today we closed at 100.43. Okay, so we made a closing high. We didn't make an intraday high. All right, either way. So, Apple's going to be a great short, okay, but Apple could run up $10. It could run up $2, $3. I'm just not sure. Once it makes a new high, you're going to get some euphoria coming into the market. You're going to get upgrades by analysts. You're going to get all kinds of hype surrounding Apple and how high it can go. And you'll have the small retail follower investor run into Apple, push it higher, buying it from the institutions who are going to sell it down. And we're going to look for a topping signal or a particular price, one or the other, whichever one I see first. And then my members will get the trade alert and we'll ride Apple on the downside. But for now, we're going to let it run a little bit because it's probably not finished going up. May take a pause day or two, may come down $1 or $2, but it's probably going to punch a little bit higher than 100. That's just my take on Apple. So, you know what? There's another thing I wanted to discuss tonight. This Euro chart. Now, the reason I bring this Euro chart, this is the Euro against the US dollar, right? So this is, and we can look at FXE, which is the ETF that we would play if we were playing the Euro, and UUP is the ETF if you want to play the dollar on the long side, or FXE playing the euro on the long side. Now, I don't talk a lot about the dollar and the euro relationship or currencies for that matter. However, here's what's worth mentioning. You have the euro breaking down. And I believe, based on my work, my mathematical calculations, my Fibonacci retracements, my everything I got points to the euro coming down to about 131. Okay, roughly in that neighborhood. Okay, we're going to call it 131, give or take a few ticks. And if I'm wrong, I'm wrong, but I'm not suggesting playing it short. I'm suggesting that may be a wonderful opportunity to buy the euro. And let's just take a look at the flip side, or, because you can play it the other way too. This is a UUP, which is an ETF that tracks the dollar. For some reason, I couldn't get the dollar chart up tonight on this platform, so I'm going to use the UUP. And what I see happening here is, if you think if you looked at the FXE chart, or I'm sorry, the Euro chart that I just showed you, that move would probably coincide with filling this gap here and a punch through the 200 period moving average on a weekly basis. Okay, that's a big move. From here, okay? You see, it would be about this length here, another move up to here. So on the UUP, it would be, over, I'm looking for north of $22. And then I think that the dollar will go down, the euro will go back up, and then I'll be issuing trade alerts to members. But that I thought was worth pointing out because I see it unfolding, and usually the largest moves happen at the end of moves. And if I'm right, then the end of this move should be about $22 on the UUP or about 131 on the euro if my calculations are on target. So I'm going to keep you guys in the loop on that one, and I'm going to keep my members abreast of when a trade alert is available, because I think that's another winner. That's going to be a multi-week winning trade, I believe. All right, so I'm running a little long tonight, so what I'm going to do is I'm going to skip gold because nothing happened. GLD was down 28 cents. The picture hasn't changed. Time and price aren't ready. I'm not ready to buy gold, so I'm going to leave it alone tonight. But I am going to cover something that I actually neglected to last night, which is USO, or oil. And nothing's changed. This is the weekly chart, so we'll start with that anyway. Nothing's changed. There's lower prices ahead. I said this thing was sick from up here, but I wasn't ready for a short yet because it just, in my time and price book, it wasn't available for a trade yet. But now, because it broke down, now I'm going to look for the long trade, and it's getting closer to the number. And I'm not going to give you the number here because I'm going to issue trade alert to my members, and it's not fair to them. So I'm going to reserve my level for the members and let them get the benefit when we get there of a nice juicy trade alert, because I think you'll get a nice multi-day bounce. On USO, you can get an easy $1.50 or $2 out of it, maybe even 2 days. So that's what I'm looking at. But here's the daily, and you can see how it just keeps breaking down. Lower to go on the USO. And if you remember, several weeks ago, I was long, and then I jumped out of the trade because I said it just didn't smell right. Just something wasn't right. It wasn't acting the way it was supposed to act. We got out even, and that was like in this neighborhood. I don't exactly remember, but it was in this neighborhood here. And guess what? Look what happened. Boom. Good thing. That's what happened. That's why I let the charts tell us what to do. The chart was telling me it just something stunk. And when if I have one reason to get out of a trade or not to get into a trade, I usually take it and move on, cut and run, worry about it later. It's kind of a shoot and ask questions later. I don't need to find out with my own money why it's down. I'll find out with the chart pattern and leave my money in my pocket. Other than that, I'm going to leave it there tonight. It was a long one, folks, but I think a good one. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis.